The construction industry is going green. On August 16, 2022, the Inflation Reduction Act was signed into action, providing tax incentives for several tax credit provisions that involve clean energy projects. The Inflation Reduction Act, or the IRA, is the biggest investment in clean energy in the US. The goal is to tackle the climate crisis and provide economic opportunity. The tax incentives are available to all taxpayers, corporate and private entities that meet the criteria within the tax credit provisions. In this series, we'll be reviewing the Inflation Reduction Act and what it means for contractors. As mentioned, prevailing wage and apprenticeship requirements may be found in many of the new tax credit provisions. One specific example is the production tax credit. This provides taxpayers the possibility of acquiring $2.60 per kilowatt hour credit for electricity produced at qualified facilities. To gain this credit, taxpayers would have to satisfy the prevailing wage and apprenticeship requirements, otherwise that credit is reduced. In context of IRA, a taxpayer is anyone attempting to receive a tax credit or incentive, and this includes contractors. Today, we'll be discussing the prevailing wage requirements. The Davis-Bacon Act and the related acts itself are not subject under the IRA, including enforcement regulations. However, there are similarities in how certain provisions are derived. The IRA follows the same prevailing wage requirements as it pertains to laborers and mechanics under DBA. Apprentices are also required to have the same certification requirements as listed under DBA. We'll be going over apprentices in a future video. And lastly, what's considered the site of work and construction, alteration, and repair are defined the same both under DBA and IRA. The IRS 87 Federal Regulation 73-580 guidance outlines requirements for obtaining tax credits. The two main ones to be found for prevailing wage are 1. The payment of prevailing wage rates, and 2. Maintaining records. Remember, there is no exception for independent contractors. This section of the IRA states that taxpayers must keep records to establish the amount of claimed credits. These records should include the applicable wage determination provided by the DOL and documentation showing each worker, their classification, gross pay, hours worked, and proper prevailing wage rate of pay. This includes the appropriate fringe benefits. It's important that these records are maintained to prove that the requirements are being met. The basis of prevailing wage on an IRA project is the payment of prevailing wage rates to employees. If a taxpayer fails to pay prevailing wage rates, they can still be considered to have met the requirements if they meet the following. Pay the laborers or mechanics the difference between the paid wages and the prevailing wage rates plus interest of 3%. And B, pay a $5,000 fine per laborer or mechanic who was underpaid to the Secretary of Labor. The fine increases to be 3 times the sum of Provision A and $10,000 per violation if it's found to be an intentional underpayment. These are the general prevailing wage expectations under certain IRA tax credits. Acts like this are being signed into fruition and are expanding every day, and we're here to help. In our next video, we'll be doing a quick tutorial on how to find the wage rates for your IRA project and giving some context as to how that's achieved.
Thank you for watching this video. If you need further help or have prevailing wage questions, feel free to give us a call or reach out to us through our website. You can also follow us on our social media platforms for any future updates. Here at Alliant, we'll help you get compliant.